Well, something's just come up. Let's go have a look. Hi, welcome to the channel. If you haven't been here before, my name is Langers, and I am the overgrown child that is the Scruffy trader. And what I'm trying to do is kind of put trading in the real world. Maybe show you a trick or two along the way. If that sounds good, please click the little subscribe button. Genuinely helps. And if you want to see some more trading content, smash the little bell and like icon. So what am I looking at? Well, today there was quite a news spike at around midday on cable. And I've been watching it for the last couple of hours as I've been tinkering on and doing other things on the screens. And it's kind of coming into play now. So what I thought I would do is I'll just flick the camera on and show you it. Simple as that. But I'll try and explain why I'm interested in it as well. And it's all about reading the candles and sort of price action, if you want to call it that. But let's jump on the screens and I'll show you.
Well, we're waiting.
Okay, so what are we looking at? Well, it's a standard hourly chart of cable, pound US. Now, if you push this out to the 4 hour, you can see that it's been this area before and it has rattled away colossally. It hasn't even looked back. It has just bounced straight off that level, straight up. Now that's not surprising because that is kind of a range if you look at it. It's not really going anywhere. Alright, so that level was quite valid. Okay, couple that with a news event that favoured the pound. Voila, up it goes. But anything that accelerates that quick can't be sustained. There's going to be a lot of people caught on the wrong side of that trade, you know, because there's a lot of people would have thought this is going short all the way. This is going to spike out all of those stops, which will accelerate the push as well. Okay, so what am I looking at? Why am I interested in it? Well, it's very simple. What goes up must come down. So one solid hour, another hour, but now look at this hour. It has found its area of interest on this level. Okay, so I've put in two areas where I'm interested in getting in the market, but also getting out of the market, which is here and here. Okay, so this is on the hourly, and that's what I'm essentially looking at. Now, trading ain't difficult. It really isn't. You know, and regardless of what anybody says to you, it is not. The hard part of trading is you. You're trying to trade way too much. You're trying to catch every wave, and you believe all the bollocks that these clowns tell you.
You ding-dong!
Give it to me again.
You ding-dong!
Oh, make it stop.
X does not mark the spot, you know. And if you're going to be a trader, it's going to take a long time, and you need to understand how to do it and treat it like a job. You think you're going to rock up and do this within a week? You're sadly mistaken. Sorry, on a run. I was having it kicked into me again this morning. But what people don't kind of understand is I've done this a long time. I know what I'm looking at. And I'm quite comfortable with the way I trade. You know, I keep it simple and it pays me. And that's all I'm bothered about. If you're looking for one of these, good luck, because I know for a fact you're going to get one of them. Sorry. Why do I say that? Because I say it over and over. It's marketed to as easy money when it's not. Right, this is priming up. So I'm going to put a couple of orders just here on this dotted line, or just around that area. Sort of just about here. I'm going to start it at 10. And I'm going to put another one in. Same place. At 15. Alright. Well, actually what I'm going to do is I'm going to brush it onto the top of that. Right. And that is it. It's as simple as that, guys. I've already been paid reasonably well this morning, so I don't need to go mental. I was telling the guys earlier that I was looking at carbon emissions, and I did a bit on it yesterday, and it was still reasonably good this morning. So I've gone back into it, and it's paid up. So I don't need to do a great deal for the rest of the day. And this is another part of trading. You see, the perception is it's a 5-minute chart and you're trading, click of the mouse constantly. You know, yeah, I'm in, bang. Yeah, I'm in, bang. Money, money, money. No, what you're doing there is gambling. That'll never pay you. Not in a month of Sundays. Over-engineering the process will never pay you. What you want to do is you want to look at a daily and a 4-hour to get your direction. You want to look at an hourly to get a broad view of what's going on for the given day. Make a choice. Make that choice market neutral. Because in a day trade, it doesn't matter what the greater trend is. You can still make money long and short. Because you're only planning on being in the market for a reasonably short length of time. If you can identify the greater trend, in other words, the daily and the 4-hour, which is why you keep an eye on it, and your trade idea happens to align with that, then you can let a runner go. If you're going against the greater trend, there's nothing wrong with that. You just target appropriately. You know, 10, 15 ticks, get in, get out, and be happy with what you've got. And that's all you need each day. You know, and I show it over and over. And it's just something I'm trying to hammer home. I mean, I'll trade once, twice a day. I never chase the markets. I might trade multiple times because I break up my position size. I don't go in full belt straight away. I'll dip my toe in the market. In fact, while this is waiting to come into play, I'll show you something. Just a sec. Or at least I will do when it wakes up. Okay. If you look at a single position, just one position, and you have your standard trader here working on a 2-to-1 risk reward, you know, target of 50, stop at 25, $5 a point, risks 125, gets 250. Brilliant. How many times do you go in the market and get stopped out? All the time. Why? Stops too tight. 25 is nothing on a lot of the bigger instruments. Cable, DAX, do 25 just like that. You know, so you're always on the back foot. Worst case scenario, you get stopped out, you get nothing. Best case or medium case scenario goes down to maybe 21 ticks, then turns round, you have a bit of a fit, the backside sort of makes a funny noise. And then you get out at break even. And you think that's a good trade because I was saved. I got out, I didn't lose anything, I made 10 pence. And we've all done it because it's the emotion, it's fear. All right. But all you ever do is tread water. You might win a little bit, give it back. Win a little bit, give a lot more back because your stop's too tight. And it's knocking you out the equation over and over.
Isn't that logical?
Trader 2 is me. I will have the same target, but I will enter completely different. My stop is 50, double yours, and I'm risking about 150 quid, all right, all told. Okay, so, but what it does is, if the market moves against me, I'll put another position in. So its target's not 50 anymore, it's 60 if it goes to full target. Because markets always go against you. Right? But its stop is only 40. So its exposure is less. Moves against me again, which it often does. Put another part of that position on. Its new target is 70, but its exposure is only 30. And so forth and so forth, till I've only got a 10 pips stop on the very last part of the position. Now, let's just assume all I did was I let it run down. It got to about 45 pips against me, then turned round. I pat myself, you know, a little noise out the back end. And I get out at break even, or at the point where I entered before. I've still made 100 quid. This guy's made nothing. If it runs to full target, I make 300, which is equal to your 2 to 1. But if I look at each one of these as an individual, their risk reward is massive compared to that. In fact, the last one is 9 to 1. And if you divided them into sort of all of them added together, divide by 5, it gives you an average of 3.6. The actual real risk reward is 2. So it's pretty much a no-brainer to me, you know, because even if I don't put these 2 positions in, I still end up making as much as this guy, if not more, constantly. And the reason being is I'm getting paid over and over. And while I'm working my way back to break even, if that's all I'm going to be doing, and I'm knocking out various target points, you know, I could come up to -10 and I've still made money because the last trade will be banking all the way up and it'll pay it off. I hope that kind of makes sense. I believe trading is all about management of trades. It's got nothing to do with X marks the spot. And trust me, if that's how you believe trading works, I think you're going to find your bank account get battered quite a lot. It's like most things, it's a profession. And in any profession, you need to understand the mechanics behind it and then apply the right tool to the right job. Now, for me, I have got no idea where a market's going to go tomorrow. Nobody does. They really don't. You know, it's all just make-believe. It's only real when your money's banked. So what do? You have contingency plans. And that's what that spreadsheet was probably badly trying to show. But that is my contingency plan. If I enter into a market, I'll stage into it. If it immediately goes my way, result. And I'm happy with what I get. And once I've been paid and I've hit my daily target, I look to get 150 to 200 pounds a day. Anything past that, that is it. You know, I just stay away. I don't overtrade, because overtrading is an absolute killer to any account. And I can't stress that enough, guys. I really can't. You see, I get emails every week saying, oh, I do this or I do that, and I always seem to get it wrong. And I notice that as soon as I'm pinged out, the market dips down another 10 pips or so, but then turns around and goes straight to the target that I thought I was going to get in the first place. How do I stop this? And it's the same theme over and over. And I genuinely think it's your stops. I think your stops are way too tight. There's nothing wrong with risk reward. You should have a strong risk reward. And a lot of people pull me apart because they think my risk reward is skewed. It is to a degree, but not in the greater picture. The greater picture is that spreadsheet I've just shown you, where my risk reward is greater than somebody standing next to me, simply because I have multiple positions broken from a single position. Does that sound right? Is that right? Well, put it this way. If I have £5 as my position size, I won't enter in at £5. I will enter in at 5 £1. And then I've got 5 positions running, but it's really the same position size. And it allows me to manage the trade. Even if I put all 5 in at once, and I do that if I'm strong enough, but it means not only can I stage into it, I can stage out of it. Because I go back to that statement. I don't know how far the market's going to go. So rather than ramble on, I'll just let this play out. The basis of this trade is a stronger than normal drive up. It's out the ordinary, and when you see that, it has to retrace. And the other side of it is the bigger trend, the big trend, for all it's sort of sideways at the moment on the 4 hour, as we can see. If I go out to the daily, whoop, we're in, you know, it's flattening here as well. So there, that level has been respected numerous times. It dipped below, strong drive up, which was the last time it happened, okay, fell back down, then it goes up. So started the analysis up here on this. I'm expecting this to come down, but I'll also be keeping an eye on it to continue the greater trend, which is this, which is why I'm not being, how shall I say it, optimistic with the targets. You know, I'm not going to swing for the fences. I just want to get in and get out because the opportunity presented itself. But once I start seeing the market turn slightly, which will probably be tomorrow, I will be looking to the long side. Simple stuff as a continuation. All right, and I showed the guys this in the Telegram group. But basically all you're doing is you're looking at the bigger trend, which is here. You're seeing the pullback down to a level. When it gets to the level, you're bouncing off to go higher. Simple stuff. But there's quite a way here, coupled with that is presenting a good opportunity to get 10, 15 pips. And why not? So that's what we're doing. So I'll drop it down to a 5 minute. I'll let it run out and I'll come back to you at the end. And that's that, guys. Stopped out. It's now 20 to 7 at night. So I've been here since 7 o'clock this morning. And for those who seem to think that trading is easy money, they are long days. And a lot of what you see is just the tip of the iceberg. It's you kind of only see when the button's pressed, but you don't see all the homework and everything that goes behind each trade. And I try and give a little insight into watching the higher time frames, etc. Anyway, let's have a little wee look at what's been going on today. So it's just stopped out cable. It did retrace. It didn't quite get to where I wanted it to be, which was in this green zone. It's not to say that it won't tonight. I'm looking at the euro as well, which is probably going to run overnight, and I'll look to manage it out tomorrow before non-farm payroll, because anything can happen with that. But that's kind of the plan. And as a day trader, you want to sort of make your money, be flat as best you can. You'll have to excuse me, I've had a shower and sliced my face open in the process, because the love of my life was twittering on at me while I was enjoying myself in the shower. Women. But she brought me a beer. Traded it in for a coffee, because Scruffy loves a beer. He likes a coffee, but he loves a beer. Right, sorry. Right, what was I saying? Didn't quite pull back to there, but it's paid me enough today. I was telling the guys yesterday that I was trading carbon emissions. That ran overnight. Opened up new opportunities today, paid some off, opened up, paid some off, opened up. And it's paid me very well. I saw this news event spike, and I just wanted to kind of show you how to trade something like that. And it's not difficult, guys. It really isn't. All you need to do, if you see a sustained move like this, that's a 50 on the 15 minutes. But if you look at it on there, it kind of shows it a little bit clearer. Strong move down, but in 1 hour, it almost wiped out all of that. There is no way that is not going to retrace, because too many people are going to be caught out on the wrong side of it. So what happens is, watch your candle zoom up, which it did on the news at 12. Then just kind of watch it. Well, I watched it for another hour, which was here, there. And as long as it didn't break this, I was happy. I had some levels in that I was reasonably confident would contain the price, and I just put an entry and an exit, which is that and that. It was all based on Fibonacci. Fibonacci is a great tool for something like this, and then just played it out, see what happens. And all I was looking to do was grab 10-15 pips out of it, which on a move like this is not unrealistic. And there we go, we achieved it. So very, very happy. Okay, got 3 bites of the cherry out of it. And I can't really make it any simpler, guys. I do try. If you're stuck, by all means, find me. My contact details are in the description, etc. I had a conversation today with the guys, funny enough, on the Telegram. And one thing you'll hear me bang on about all the time is less is more and patience. And it's really the fundamental of trading. And I know it sounds odd to think, well, how's that the fundamental of trading? Because surely the charts and everything like that are. They are, but they're only a small part of it. So if you've got a set of rules, decent set of rules that you abide by, you have to be patient and wait for the market to come to you to tick off those rules. So what I kind of suggest is have 3 or 4 rules that you can tick. You know, is the market on a level? Yes. Is it a key Fibonacci point? Yes. Is a stochastic overstretched? Yes. This sort of thing. And when all 3 are ticked, or 4, whatever, however many rules you have, then you enter the market, not before. And then have a similar criteria to get out. And what you'll find is, all right, it'll slow your trades down. In other words, you'll not be trading as much. But when you do trade, it's a pretty solid setup, like an A1 setup, if you like. And what you'll find is, come the end of the week, you've got money in the bank. And isn't that the whole process of what we're looking for? As long as I start with 0 and end with 1, I've had a good day, because I've made more than what I had when I started. But I might have to wait all day to get that 1. Well, that kind of makes sense. Anyway, I'm going to enjoy my day, spend the night with Winky. I got a new toy delivered today. I did a challenge to myself 2 weeks ago, and it's getting delivered today. New PC setup, because it's getting a bit old. So very, very happy. So I'll show you that next week, because my office is getting redone on Saturday afternoon. So happy days, happy days. So as always, guys, do what you love, and the money will follow. See you all in the next one.